All right. I think everyone be happy to get this started. Thank you very much, everyone, for joining, and everyone who is joining. Good afternoon and happy 2021 on behalf of the MIABC board. We hope you had some time to rest over the winter break. We would like to thank you once again for supporting the MIABC and your membership. Your support and continued membership in the organization allows us to maintain our efforts to provide you with the exceptional speakers for the webinars free of charge to our membership. And thank you to all those non-members and students that have joined as well today to hear about the commercial real estate outlooks from two leading organizations in the Canadian marketplace. We're also excited to announce just a couple of kickoff things for the year. Announce that our winter-spring lineup of webinars will be updated online shortly. First with a webinar in February for a lender panel, followed by a developers panel in March. April, excited to have Mr. Eric Bond back to talk from CMHC to provide an update with all their huge amount of statistics there on the multifamily market. And then in May, we're hosting a very special First Nations development discussion that should be incredibly informative and interesting, I hope, for everyone that attends that. In our continued efforts to provide more value to the membership, we will also be offering a different and more intimate sessions through what we are now branding our 10 and 10 lineup, where there'll be about 10 people in a session led by a speaker presenting for 10 minutes on a topic, a bite-sized topic, followed by 10 minutes of discussion within this small format group. If there's a long wait list, we've asked those speakers to follow on with additional 10 and 10 sessions. So trying to provide that more intimate and interactive and networking approach that our MIABC membership has been focusing on and looking forward to, that we cannot do at the TCC right now. Very excited to provide this for everyone. The first session will be with Mr. Anees Devji of Richards B. All Sutton to discuss changes to legal clauses and leases that have occurred during the COVID-19 pandemic. And then in February, followed with Mr. Frank Chong of the BC Financial Services Authority to talk about the impact of the current challenging market on strata finances, especially as it relates to higher insurance premiums. Watch for these announcements and more in your emails. There will be a number of free, but the space is limited, and we'll try to accommodate as many people as we can and try and provide as much as we can for memberships. Today, we are very proud to host Altus Group and CoStar Group as they go head-to-head in their discussion about their outlooks for the commercial real estate markets. Today's session is brought to you by and sponsored by Bridgehouse Law. Thank you very much, Tim Lack. Bridgehouse is an international business, real estate, and litigation firm with offices in Atlanta, Berlin, Charlotte, and Vancouver. They have expertise in business transactions, employment, immigration, international trade, and of course, real estate transactions and lending. Tim very much asks kindly for all your billable hours that you can provide him. So thank you very much, Tim and Bridgehouse Law, for supporting today's session. We're very proud to invite and host for your viewing pleasure the panel here, which will be moderated by Wendy Waters, who is the Vice President of Research Services and Strategy at GWL Realty Advisors. She leads the North American research function for the company and is based in Vancouver. Wendy and her team are responsible for tracking the longer-term drivers of real estate performance, as well as for monitoring real estate market trends. They use data and information from both Altus and CoStar. On the panel today that Wendy will be moderating is Mr. Colin Johnston, the president of Altus Group's Research, Valuation, and Advisory Group division in Canada. It's a group comprised of over 380 appraisers, economists, planners, advisors, and data scientists operating in 14 major markets nationally. Altus is a leading provider of independent software, data solutions, and consulting services to the commercial real estate industry. And also joining Colin will be Carl Gomez, who has over 25 years of business experience and is a well-known Canadian economist and respected investment professional specializing in real estate. He was recently appointed the chief economist and head of market analytics for the CoStar Group, a real estate information and technology company listed on the NASDAQ. And with that, I'll gladly hand it over to Wendy to take it from here. Really looking forward to your group's discussion. Thank you.
Okay, thanks, Graham. I think we are all ready to go. And I think just to give people an overview of what we're doing. We've got some slides on each asset class. We're going to do an asset class and then have a discussion. And we're going to also, once we do our 4 asset classes, allow for some time for some questions from the audience at the end. I'm not quite sure how one asks a question, but you guys can experiment with this webinar jam software, which we are all, I think, using for the first time here. So I am going to share a screen, and we are going to start with Colin on the office market. And so they've produced their own slides, which I put into a deck, editing which buildings they chose. So we've got Vancouver Centre 2 on Colin's slide, which is a GWLRA new development, which probably a lot of you are familiar with. So with that, we'll turn it over to Colin to get us started on the office market.
Thanks very much, Wendy. Hello, everybody. Usually at this time, I'm kind of looking forward to seeing some of you up at Whistler for ICSC. Hopefully, we'll be there again next year. Fingers crossed. Graham mentioned bite-sized topics for those 10-minute sessions you have coming up. I don't think office is bite-sized. We'll provide all these slides to you, but we'll go quickly through this so we can get to the discussion. So first slide. Here we're tracking office availability, comparing Q4 2019 versus Q4 2020. On the far right, you can see national. So you can see that we have gone up nationally, almost a point and a half. The big markets are really what we concentrate on. So MTV, right? Montreal, Vancouver, Toronto. So you can see quite a spike from 5.9 to 9.1 in Vancouver. When we go to Toronto, similarly 8.7 to 12.4, and Montreal 11.5 to 13.8. Next slide. Big story really is the increase in office sublet availability as a percentage of space. And we track that carefully. And you can see the spike here. Here we show, yes, end of year Q4 2019. Then we show the spike up to Q3 2020 and end of year. So again, if we focus on those 3 markets, which I mentioned, Vancouver, you'll see quite a spike from 23.3 up to 32%. Similarly with Toronto, again, up to 24, and Montreal, not quite so much, but again, an increase. And then when we look nationally, not surprisingly, a similar trend. So I think, the question is all this sublease space, is it in downtown office markets? It mainly is arising in downtown CBDs, quite frankly. And one of the questions is it yet having an impact on rents? And we'll talk about that a little bit further on. Right now, I would definitely say it's having an impact on things like tenant inducement levels, perhaps broker commissions, incentives, etc. If we're talking about office sublet availability, I think it's definitely something we are definitely going to track in 2021 and beyond. Next slide. Office construction and availability. So I think it's important to take a look about what's under construction and how much of it's pre-leased. And so you can see here how much is under construction in these markets. We didn't include the Alberta markets because there's nothing really under construction in Calgary and Edmonton. They've got enough. But you can see over 5 million square feet in Vancouver, and you'll see the availability rate. The red dot is 43%, so 57% pre-leased, which is not bad. Similarly with Toronto, almost 10 million square feet coming on, but there's only 35% of it that's not pre-leased. Montreal, a little bit of a different story. Not so much coming on, but then again, Montreal hasn't had a lot of new supply for decades. So that there's a fair bit coming on, and we can see there that only about 50% of it is pre-leased. But nationally, overall, again, the majority of the space